The US dollar closing Tuesday's trading higher in Iraq is not just a routine market movement. It reflects a deeper interaction between policy, supply and demand, public confidence, and regional economic pressures. When the dollar trades around 148,000 dinars per $100, it immediately signals tension within the currency ecosystem, especially when compared to earlier sessions where prices were noticeably lower. This kind of movement attracts attention, not only from traders and exchange shop owners, but also from ordinary citizens whose daily purchasing power is directly affected by even small fluctuations in the exchange rate. According to market observations reported through Shafaq News surveys, the dollar's rise in Baghdad's Kifa and Al-Harithia exchanges to around 148,500 dinars per $100 represents a clear upward shift from the morning session, where it hovered near 147,650 dinars. This difference within a single trading day highlights the sensitivity of the Iraqi currency market. It shows how quickly prices can respond to changes in demand, expectations, or rumors about upcoming decisions by financial authorities. In Iraq, currency markets often act not only to concrete policy moves, but also to perceptions of what the Central Bank of Iraq might do next, whether related to dollar auctions, regulatory enforcement, or coordination with international financial systems. In Baghdad, exchange shops selling the dollar at approximately 149,000 dinars while buying at around 148,000 dinars illustrate the spread that exchange houses maintain to manage risk. This spread is not arbitrary, it reflects uncertainty. When volatility increases, exchange shops widen the gap between buying and selling prices to protect themselves from sudden swings. For everyday Iraqis, this spread means higher costs when converting dinars to dollars, which can affect everything from import prices to personal savings strategies. Many citizens follow these rates closely, often checking them multiple times a day, because the dinar's value plays a crucial role in household financial planning. The situation in Erbil, where selling prices stood near 148,450 dinars and buying price of 350 dinars, shows a slightly tighter range compared to Baghdad. This difference between regions is not unusual. Regional market dynamics, liquidity levels, and local demand for dollars can all influence pricing. Erbil, with its own commercial patterns and cross-border trade considerations, sometimes experiences milder fluctuations than the capital. However, even these relatively small changes can have psychological effects on traders and consumers, reinforcing the sense that the market is unstable or at least uncertain. At the core of this movement lies the ongoing challenge Iraq faces in balancing dollar supply with domestic demand. The US dollar remains essential for imports, especially for food, medicine, electronics, and industrial materials. When demand for dollars rises, whether due to increased imports, capital flight, or precautionary behavior by businesses, the exchange rate tends to move upward. At the same time, any restrictions, delays, or stricter compliance measures in dollar distribution can amplify pressure in the parallel market, pushing rates higher, even if official rates remain unchanged. Another important factor influencing the dollar's rise is public confidence. Currency market as much by psychology as by fundamentals. When people believe the dinar may weaken further, they rush to convert their holdings into dollars, increasing demand and accelerating the very movement they fear. This self-reinforcing cycle has been observed many times in Iraq's recent history. Even rumors on social media or informal networks can spark sudden buying waves, particularly in markets like Al-Kifa, which often acts as a bellwether for broader trends. The Central Bank of Iraq plays a critical role in managing these dynamics. Its policies regarding dollar auctions, international transfers, and compliance with global banking standards directly affect how many dollars reach the local market. When procedures become stricter, even for legitimate reasons such as preventing money laundering or illicit outflows, the immediate effect can be reduced liquidity. Traders then turn to the open market, where prices are determined more freely, often resulting in higher rates. The Tuesday closing figures suggest that such pressures are still present and that the market has not yet found a stable equilibrium. It is also important to consider the regional and global context. The strength of the US dollar globally can influence local markets, including Iraq's. When the dollar strengthens internationally due to factors like US interest rate policies or geopolitical uncertainty, emerging and developing economies often feel the impact more sharply. For Iraq, which relies heavily on oil revenues denominated in dollars, a strong dollar has mixed effects. On one hand, government revenues in dinar terms may increase when converted from oil sales. On the other hand, the cost of imports and the burden on consumers can rise, creating inflationary pressures. Inflation is a key concern whenever the dollar rises against the dinar. Higher exchange rates typically translate into higher prices for imported goods, which make up a large portion of the Iraqi market. Even locally produced goods are often affected, as production inputs may be imported or priced in dollars. As exchange shops adjust their rates, merchants often preemptively raise prices to protect margin, sometimes even beyond what the exchange rate alone would justify. This behavior can erode purchasing power and deepen public frustration. The contrast between the morning session and the closing rates on Tuesday underscores how quickly sentiment can shift. A rate of 147,650 dinars per $100 in the morning might have given some traders hope that the market was stabilizing. The move to 148,500 by the close, however, sends the opposite message. Such intraday volatility can discourage long-term planning and encourage short-term speculation. Traders may hold onto dollars longer, expecting further increases, which reduces supply and pushes prices even higher. In Erbil, the narrower spread and slightly lower selling price compared to Baghdad might indicate relative dollar availability or calmer demand conditions. However, this does not necessarily mean immunity from broader trends. If the upward momentum continues in Baghdad, it often spreads to other regions. Markets are interconnected, and arbitrage opportunities quickly align prices across cities. Exchange dealers communicate constantly, and price differences are rarely sustained for long periods. The reported buying price of 148,000 dinars in Baghdad and 148,350 dinars in Erbil also tells an important story. Buying prices reflect how much dealers are willing to pay to acquire dollars. When these prices rise, it suggests dealers anticipate continued demand and are willing to pay more now to secure inventory. This expectation-driven behavior can be a leading indicator of further increases, as it shows confidence in future price appreciation rather than fear of a downturn. For the average Iraqi citizen, these numbers are more than statistics. They affect decisions such as whether to save in dinars or dollars, whether to make purchases now or wait, and how to plan for expenses like rent, education, or medical care. Many salaries are paid in dinars, while many large expenses are effectively dollar-linked. As the dollar rises, the gap between income and costs widens, increasing financial stress for households. Businesses face similar challenges. Importers must decide whether to absorb higher costs or pass them on to consumers. Retailers must balance competitiveness with profitability. Small businesses, in particular, are vulnerable to rapid currency movements because they often lack the financial buffers available to larger firms. A rise to around 148,000 dinars per $100 may seem modest on paper, but for businesses operating on thin margins, it can significantly affect cash flow. Speculation also plays a role in shaping these movements. Currency traders who believe the dinar will weaken further may actively buy dollars, not for immediate use but to sell later at a profit. This speculative demand can exacerbate upward pressure, especially in markets where regulatory oversight is limited. The visibility of exchanges like Al-Kifa means that price changes there can quickly influence expectations elsewhere, creating a feedback loop between perception and reality. The role of government communication should not be underestimated. Clear, consistent messaging from financial authorities can help stabilize expectations. When communication is lacking or contradictory, uncertainty fills the gap. In such environments, people tend to rely on informal information sources, which may amplify fear or speculation. The Tuesday closing rates suggest that, at least for now, the market remains unconvinced that downward pressure on the dollar will materialize in the immediate term. Oil revenues, while substantial, do not automatically stabilize the currency market. The mechanism through which dollar revenues enter the local economy matters greatly. Delays, bureaucratic hurdles, or policy constraints can limit the immediate availability of dollars, even when the state has ample reserves. This disconnect between macro-level strength and micro-level scarcity is a recurring theme in Iraq's currency story and helps explain why the dollar can rise even during periods of high oil prices. Looking at the broader pattern, the movement from 147,650 to around 148,500 within the same day fits into a longer-term narrative of cautious upward drift punch short-lived corrections. Each new level becomes a psychological reference point, Once the market becomes accustomed to seeing rates near 148,000, expectations adjust, and returning to significantly lower levels becomes more difficult without strong intervention or a shift in fundamentals. The difference between selling prices in Baghdad at 149,000 dinars and in Erbil at 148,450 also reflects localized competitive pressures. Exchange shops compete for customers and pricing strategies can vary depending on foot traffic, liquidity, and perceived risk. However, these differences are relatively small, suggesting a broadly aligned national market rather than fragmented regional systems. Ultimately, the dollar's higher close on Tuesday is a snapshot of a complex and evolving situation. It encapsulates the interaction of policy, psychology, regional dynamics. While the numbers themselves 148,000, 148,500, 149,000 may change in subsequent sessions, the underlying forces driving them remain deeply rooted in Iraq's economic structure. Understanding these movements requires looking beyond daily fluctuations and recognizing the patterns and pressures that shape the currency market over time. As traders, businesses, and citizens digest these closing rates, their collective reactions will help determine the next move. Whether the market stabilizes, continues to climb, or experiences a correction will depend on a combination of concrete actions by authorities and intangible shifts in confidence. For now, the higher close serves as a reminder that the Iraqi dinar remains sensitive to both internal decisions and external forces, and that even a single trading day can reveal much about the state of the broader economy.